Stryzewski, CEO, Sound Planning Group. David, good to see you. So how are you feeling about your economic outlook? Because that will definitely affect how you invest.
Well, Nicole, last week was a pretty quiet week, but this week is going to have a little bit more louder noise. We've got both CPI, PPI. We've got some manufacturing coming in from the Philly and New York indexes, and we're going to get some real estate information as well. So, I personally think that if things come out hotter than expected, which is, of course, what we saw in the last CPI print, that we're going to retest these April lows, and that could be really, really bad for markets. Now, I'm not ultimately sure what these numbers are going to come out at, but I will tell you this much. I believe that we have seen a trend develop in inflation, and, basically we haven't moved in about 12 months, and I believe that we're going to be trending much higher as the year continues to go forward. So I don't think that bodes very well for stocks in general, very much, and it's also not really great for those that are expecting, the Fed to cut, here, several times here this year.
Right, understood. I mean, you did say U.S. recession delayed, not derailed. Tell me more about that.
Okay, so, when we look at the ISM indicators and the PMI indicators, these tell us are things expanding or contracting. And so they've been one of the best indicators that we could look at to identify if there's going to be a slowdown in the market. And so right now we're below 50 in both of those. That's very recessionary in nature. And also if we look at indexes like the Buffett index, the Shiller PE ratio, mean reverting indexes, all of them are at the place that are considered extremely overvalued. And so, hey, the market continues to rally. I vote it goes up forever. Here's the reality. I think that we need to be very, very cautious right now. And I think that we should have a healthy respect for both sides of the market because, hey, we love the upsides, but let's prepare in the event that there's some downsides as well. Let's put those the brakes on here, if you will, in order to not lose this great ground that we've gained.
Right, understood. So what's the investment advice for folks? How do you tell them to make some money?
Okay, so, for looking at where the world's headed right now, I think that there's a few things to understand. One is that energy, oil very specifically, is still the only option as far as energy goes worldwide. And because that only option is ultimately a very profitable option, and these companies have a lot of cash flow, they're never going to be cutting their dividends, that's for sure. These companies are poised really well with, it looks like 36.9% increases on oil since President Biden took office. So, I think that we're looking at a higher oil price. And so I think that people should be allocating to this. Ultimately, Russia will not let the price go lower because it will affect their ability to actually defend themselves or wage the war against Ukraine, whatever. The next thing that I would just note here is that of the Magnificent Seven, I'm particularly kind of excited about Apple right now. And as you noted in your lead up there, about 10 hours ago, Apple has noted that they are finalizing a deal here with ChatGPT for integration inside of the phone. And one of the things I think that's really important to note here is that AI obviously is incredible. GPT was the first and fastest to 100 million users. But if what we can do is figure out how to integrate these ideas into this smart technology. And of course, as you're showing here, Apple's got all these amazing products and this seamless integration from the phones to the computers to the watches and the iPads and everything in between. And if they can make life more efficient, if they can figure out how to get AI and integrate it into our lives, then I believe that this is what's going to lead the second revolution of this AI movement here. And that is the integration into our daily lives. So it's kind of exciting to be looking at. And even though Warren Buffett was a net seller here this last quarter, let's just be clear. Apple's been making 25% year over year for the last decade. So taking some chips off the table is something that, the Oracle of Omaha is ultimately doing right now. And he's sitting in higher cash positions than he's ever had in Berkshire Hathaway.
Right. So at this point now, and this is exciting now to get ChatGPT onto the iPhones with OpenAI, this new deal, which obviously is a big deal as we start to get more details on it. Dan Ives calling it the golden goose for Tim Cook. XLE and Apple, you would buy the ETF, you would buy Apple, And you think both of these can move higher to the tune of what, 10%, 15%? Over what period of time do you hold on to these?
Well, I think that the energy sector, because there's no other option, I think that that's going to trend in the right direction here for at least the next 5 years. We're having a real challenge right now in the United States with these EVs. And by the way, for full disclosure, I own two. But the point here is that we've got to power AI. We've got to power all these cars, and of course, there's heat waves and everything else that are going to be coming in the middle of the summer here. And so again, oil is definitely not going anywhere. What kind of an upside could we see? I think that we break $100 by the end of the year in oil per barrel, and so that's trending in a direction that is not favorable for the U.S. consumer. As far as Apple goes, that's up in the air. I could for sure see another 15-20% year end if they can get this integration and they can get people excited about what they're doing and what's going on. The challenge they're going to have, though, is that if the consumer is slowing down right now because of record deficits in credit cards, highest interest in credit cards, layoffs that are absolutely happening right now in the unemployment. I think that, Apple could see a little bit, of a staggering environment from that standpoint, but I believe that they are positioned very well, and those mass adopters like myself will take advantage of it.
At the end of last week, we started to get some breaking news about the Biden administration looking closely at clean energy and raising levies possibly to the tune of 25 to 100% on the likes of EV and solar and batteries, things being produced out in China. And I guess theoretically that could be a good thing for a name like Tesla. Maybe, I don't know. But since you do own EVs and you like to drive them, it sounds like, and Tesla's been beaten down, right? It's down 30% this year and sitting at 171. Do you think there's opportunity in a name like that, or you're too afraid to touch it?
Great questions. So I bought two used Teslas, by the way, but they were just 2 years used and got great value out of them because the price went down. So that was the reason why I own them. They were a lot of fun. When we're looking at the price of Tesla right now, I would say this. When we started 2023, Elon Musk had to purchase Twitter the year prior. So what was happening is a bunch of owners' shares were being divested and put into the market. That was the first time that they were being picked up. So that was new supply that met the demand that was there. And then ultimately, when we had the Inflation Reduction Act, that added another $7,500 per unit that was being sold. So that stimulus saw an amazing run this last year. I don't know if it's as sustainable going forward, but I'll say this much of Tesla. Of all the EV automakers out there, I believe that they're probably the only one that's actually going to remain profitable and be able to stay in this business. I couldn't imagine purchasing an EV and then that company goes out of business and I can no longer actually get my car serviced. That would be a horrible situation. But just even look at Ford right now. They were losing so much on that Lightning, they stopped making them. And so, I ordered the Hummer a couple of years ago. It's never come out. I don't expect that they're going to be calling me in anytime soon based on GM's, issues last year with employment and all the strikes that took place. But, hey, yes, there could be some tariffs that could help U.S., manufacture, but that ultimately comes back to the Biden administration again. Will they allow permitting? Will we allow the lithium mines that are here in the United States to actually get mined? Or will we just outsource that and allow other nations to do it, believing that this is the cleanest way to do things, yet it's too dirty for us in the United States to actually be doing?
All right, David Stryzewski, thank you. Sound Planning Group. Thank you, David.
Great. Appreciate you, Nicole.